Hello and welcome back to the Satoshi Society YouTube channel. My name is AJ, one of the co-hosts here, and today we're going to go over the technicals of Bitcoin, and we're going to take a look at the DXY as well, because there is some bearish news for crypto on the DXY, and it's not looking too good for Bitcoin at this moment in time. As of right now, I am still very bearish on Bitcoin. I don't feel as though it's the right time to get bullish. So I'm going to get straight on into the DXY, because there is some bullish news for the DXY, which, as we know, is bearish for crypto. So before we get into this technical analysis video, please make sure you smash a like on this video. I would really appreciate it. It does really help the channel out, and I can continue to bring this content for you as well. So getting on straight into the video then, taking a look at the DXY. Now, we know that over the course of this year and towards the end of 2021 that the DXY has been in a massive uptrend. If you've been watching the channel for a while now, you know I've been preaching this to you because it is very, very important. The DXY is very important. When the DXY goes up, we see Bitcoin come down. When the DXY goes down, we see Bitcoin come up. And what we are seeing is a slight period of consolidation for the DXY right now, and we are finding support along this weekly level right here. So initially, we are still in this massive uptrend. We're still creating higher highs and lower highs, as well, as we can very clearly see. And right now, we're having this slight pullback, slight period of consolidation for the DXY, but still initially we are in this uptrend. We haven't broken that uptrend yet. To break that uptrend, we would have to break $110. Now, if we're looking very closely at this DXY, if we have a little zoom in on this daily, what we can kind of see is we can see right here consolidation towards the downside. We know that consolidation towards the downside is a sign of a bear flag. So what I've done is I've gone into a smaller time frame, for example, the 4 hour, and then I have actually drawn in a bull flag. Now, a bull flag is a very bullish pattern, and they do tend to break towards the upside. Now, Now, what we can see right here is a very, very clear bull flag. So we have the resistance up here. We also have the test of the support down here as well. And we have the flagpole right here. So it's a very, very clear bull flag. And if we are going to take the price target for this bull flag to the potential sort of breakout point, this could give us a target of around $116.5 for the DXY. As we know, this is going to be very bearish for crypto, because when the DXY pushes towards the upside, we see Bitcoin pull back. So if we do get the break towards the upside of this bull flag on the DXY, then I do anticipate that the DXY is going to continue this uptrend on the daily, and we are going to form another higher high. And that price target actually comes in line with some major resistance. So what we can see here is we have this upwards sloping trend line here, and this has acted as resistance right here. This has acted as resistance here. If we go further back, it's also acted as resistance here and acted as resistance here. So this is a very, very strong resistance level. So this price target for the bull flag lines up with this resistance. So there's a lot of confluence telling me that the price could potentially come up to that $116.5 level. So that is my next target for the DXY if we do get the break towards the upside of the bull flag on this 4 hour chart. So if we get the break towards the upside, a nice candle break towards the upside, then I do anticipate we are going to form another higher high on the DXY at approximately $116.5. And there we may find some resistance, okay, because it's previously been a very, very strong resistance level, where we could get a rejection, come back down to the support, which is at this upward sloping trend line, and then potentially find support there, and then maybe come back up to the resistance again, because this level is acted as support as well. Support there, support there. It came very close as being support here, but initially it is support, as we have two touches on it. So potentially this will act as support later on, but I do think if we do break towards the upside of the bull flag, we're going to come up to the resistance at $116.5, which, as we know, is going to be very, very bad for the crypto market. Taking a look at also the traditional market as well. So taking a look at that traditional market, taking a look at S&P 500, we are actually bouncing off of this support level, but if we do see that target of $116.5 being hit on the DXY, then I do think the S&P 500 will break this major support level, and we could be seeing the price come down to around $3,230 approximately, which is that next target if we do break this major support level. Same story with Bitcoin. If we do see Bitcoin break towards, if we do see the DXY break towards the upside of that bull flag, I do anticipate that Bitcoin is going to pull back as well. Now, you know that I've been looking for a trade for Bitcoin, and we've specifically been looking for a short trade. Now, that hasn't occurred because we didn't come up to my shorting area, which is this area here between $20,180 and $20,500. That's the area that I'm looking to short, but the price just hasn't made it up there yet. So right now, I'm still just sitting on the sidelines, but we have traded that level twice before. We traded this test here. We shorted that really nicely to the value area low. We shorted this one to the value area low as well. So we made really nice trades there. That's what I was looking to do. I was looking to make another trade, but the value area high was acting as resistance here. And this, we're getting rejected from this level here, because if I do pull, where is it? If I pull a fib, from somewhere, there is some resistance coming in. So I actually think it's from the high up here, maybe to the low. I'm not too sure, but there is some resistance coming in there on using that golden pocket as well. I can't remember where it was, but yeah, there is some resistance coming in there. But initially, we are finding support at this red line here, which is the POC, which is the point of control of this range that we are in on this 4-hour chart. So as you can see, the POC has acted as support here. We've got the push towards the upside, and it's also acting as a bit of support here, but we are coming down again and coming into that POC to test it as support. Now, if we break that POC, the next level is the value area at $18,840. If we break that, then I'm looking at the price coming down to the daily level. And of course, during that time, we would most likely see that DXY pushing towards the upside as well and breaking towards the upside of that bull flag. Now, the way I tend to trade in a bear market is I don't like to short support breaks. I like to short resistance. I like to short resistance. So the last two shorts that I've taken is these two resistance points here, and they played out really nicely. But I am considering taking a short if we do break this daily level here. This daily level is $18,460. That's where the daily level is coming in. If we go to the daily chart, we can see that it has been support on the daily level here, support here, and it's been a bit of support here as well. And we've respected this very, very well on the 4-hour. So this is a very important daily level that we need to be taking into account. And if we do get a break towards the downside of this daily level, I will most likely enter a short, but only if we do get that break towards the upside of the bull flag, which is on the DXY. So if we go back to the 4-hour, if we get the break towards the upside of the bull flag on the DXY, and we get the break of the daily level support, then I will most likely enter a short position on Bitcoin, because this is a major support level. And if we do break that support level, then we could see the price pull back. Now, for the take profit for that trade, if it were to happen, I would take profit at the previous swing low. So as we can see here, the previous swing low is around $17,600. So that's where my take profit would be, and I would take maybe 50% of the chips off the table, leaving 50% in to see if we do see the price break below that $17,600 level and move much lower, which is a possibility if that DXY continues to push towards the upside. Because as we know, when the DXY goes up, Bitcoin goes down. So that is what I'm looking at right now. We are holding slight support at that POC, at the point of control. But if we break that, value area low is most likely going to be hit. And if we break the value area low, we will come down to the daily level. That's exactly what's happened previously. Every time we've broken this value area low right here, we have actually come down and tested that daily level. So that is what I'm looking at for Bitcoin. And if we do break that daily level and we do break towards the upside of the bull flag on the DXY, then I am going to enter into a short position on Bitcoin. And of course, I will keep you updated with that. I will go live if and when I am taking that short position. Moving on swiftly then to Ethereum. Ethereum's at a very, very nice support level. We do have this golden pocket coming in, the Fibonacci golden pocket coming in from this swing low to the swing high. The Fibonacci golden pocket is coming in at this area and has acted as very, very strong support. We also have a daily level here as well, which has acted as really nice support. So this is a very strong confluenced support area for Ethereum, and Ethereum is holding up the price really, really nicely. But as I said, the DXY breaks towards the upside and Bitcoin sees that reaction towards the downside, then Ethereum will most likely follow it. If we take a look at the Bitcoin dominance, we're seeing that the Bitcoin dominance is pushing towards the upside. So what this means is when the price is going down, we're seeing these altcoins, we're seeing Ethereum get hit a lot harder, as in percentage loss wise, when the price does come down. So initially for me, I do think if we do get the break towards the upside, the downside here, we are going to see a pretty big reaction for Ethereum, and this is another shorting opportunity that I think we could take as well, because we have that daily level coming in, a very strong daily level, which is also coming into slight confluence with that market that we are currently at right now. Now, as I said, normally in a bear market, I like to trade the resistances. I like to short the resistances. And short that I was at for Ethereum was 1,493. It doesn't look like the price wants to come up to those resistance levels. So I'm thinking if we have major support, then potentially we could short this because the DXY looks as though it wants to continue pushing towards the upside. And right now we are testing that resistance. So potentially today we could get that break towards the upside of this bull flag on the DXY, which would most definitely push the price of the traditional market and the crypto market down. And the target for that, as I said, would be 116. That lines up with daily resistance as well. So it's a pretty realistic target, and it would continue this massive uptrend that we do have as well. This is major resistance, as you can see right here as well. Crypt Invest, DXY and 10-year yield moving slightly up. Yeah, as we can see here, the DXY is pushing up. Taking a look at that 10-year yield, that is pushing towards the upside as well. When the yield goes up, the 10-year yield goes up, we do tend to see Bitcoin pull back and the traditional market pull back as well. Now, I mentioned this yesterday. There is talks of a recession. It does look like that we are going to be in a recession, because what we're seeing here, this is the 2-year and the 10-year yield curve. What you tend to see is, well, it's the facts of it. Okay, so when you put money into into investments such as bonds, okay, you would think that if you put your money in there for longer, you would get more of a return, and that is the case. That is normally the case. If you put your money into an investment that gives you yield, you tend to see the yield is higher when you invest for longer. But what we're seeing, okay, and this chart shows it perfectly, what we see is when the 2-year exceeds the 10-year yield. So if you invest for 2 years, the yield is higher than if you were to invest for 10 years. What we tend to see is when that happens, we go into a recession. It's happened here. So 1997, it happened. 1982 it happened, 1991 it happened, 2002 it happened, and 2008, 2009 it happened as well. Every time that 2-year exceeded that 10-year yield, we can see that happening now. So the 10-year yield is at 4.086%, but the 2-year yield, okay, if it wants to load. Okay, well, we can see it here, in the small number here. So what we can see is that 10-year yield is at 4.86%, and the 2-year yield, which is this one here, is at 4.53%. Now, this chart is lagging behind a little bit, but we can see that it was getting very close. This is, 2018. We were getting very close to that yield inversion. And we are at that yield inversion right now, as we can see very clearly now. The 2-year yield, which is this one here, has exceeded the 10-year yield. So this means that a recession is here, or a recession is actually about to occur. So if I can just zoom out again, here we go. Yeah, we can see that the 2-year yield right here is at 4.507. Okay, it's exceeded that 10-year yield. So this is a signal that we are in a recession. And of course, if we're in a recession, we are going to see these risky assets push towards the downside even more than they already have. So the expectation is that we would break these major support levels here and come down to the next major support levels. Now, I want to show you something that happened in 2018, which we are seeing happen right now as well. So what we have right now is this descending triangle here. Now, we did get a break towards the upside. For me, I've spoken about this. This is a fake out for me because there is no volume. If we're taking a look at the volume, there's no volume coming in. So it's a fake out. It's a very clear fake out. If we see a breakout with no volume, it's a very clear fake out. We've seen this actually happen before. So I'll zoom out and we come back to 2018. Taking a look at 2018, we've seen the exact same scenario. So this was the 2018 bear market. We saw the exact same scenario play out. We had that descending triangle, right here. We got the break towards the upside. Okay, the break towards the upside was right here. And as you can see, if we line that up with the volume, there was no volume coming in. Absolutely no volume. So what happens? The price came back down, retested the previous resistance as support. The support couldn't be held because no volume was coming in. And what happened? We saw a massive sell-off. And we saw that last leg towards the downside, establishing that bottom of the bear market at $3,125. Then we saw the consolidation period. And then the bull market started, where we went to all-time highs at almost 14,000. So we're seeing the exact same thing happen right now. If we go back to the current period, we do have that fake out right here. The price is coming back and testing that previous resistance as support. There's no volume coming in. Unless we can get volume coming in, I do think the likelihood of it is that we are going to see a massive sell-off, and we are going to see the price break that previous low at $17,500. Coming down to maybe 15,000, maybe even lower, to that target that I have at $12,000. So we do just have to be very aware of this. I know a lot of people will get in bullish when the price comes up to 20,000 and gets above 20,000. People are just getting too bullish. It's not the right mindset to have within this bear market right now. I do still think there's a last leg down. If we can get volume at this area that we're at right now, then maybe, yes, we have already established that bottom. But if we cannot get that volume that we need to push the price up, then we are going lower. The likelihood of it is we are going to see a big sell-off, and we are going to see the price come to these lows that, these lows that I have been talking about. We do have this monthly level coming in at $13,900 approximately. That is a target if we do break this major support. And then the next target is $12,000. So if we can't get the volume in, then the likelihood of it is we are going to see a sell-off. And this range that we have been in for a very long time now is most likely going to be broken. So yeah, for me, if we do break this daily level on the Bitcoin chart, the DXY does break towards the upside of this bear flag on that 4-hour, then what am I going to do? Well, I'm going to enter a short position and hopefully ride that short position open until we hit the previous low, which is at $17,600 approximately, and take profit there, 50% potentially, and leave 50% in, because if we did break that $17,600 level, I would expect the price to move much further down as well. So that is my plan. As always, I will go live just before I open up that trade. That's what I did with these two previous trades here. Actually, three, because we traded that one as well. So I went live and I showed you me executing these trades, and we did see those trades play out really nicely. So I'm expecting to continue this winning streak that we have on. And as I said, I normally like to trade resistances, but because there's so much support on Bitcoin at this daily level here, there is also so much support on Ethereum as well. And we are getting that break towards the upside, potential break towards the upside of the bull flag on the DXY. It's just looking very bearish for me, and a really good opportunity to protect that portfolio by opening up those short positions. So that is my plan. As always, I will go live. And if you did enjoy this update, then please, please, please make sure to smash a like on this video. Just to go over it again, if we break the POC, which is this red line, at $19,120 approximately, the next target is the value area low at $18,860. If we break that, then we are going down to $18,450 approximately at the daily level. And a break of that, then I'm entering that short position, taking that down to the $17,600 level approximately, where I'm taking 50% profit and then leaving 50% in to see if we're going to break off that previous low, where we could see the price see a massive, massive dump off of that. So again, I do still think we are very, very bearish right now. DXY is continuing to push towards the upside. But of course, if I do take any trades, I will make sure that you are the first people to know about it. So if that sounds interesting to you, please make sure you smash a like. If you enjoyed the content, smash a like. I do really appreciate it. It does really, really help me out. And I can continue to bring these trades that I've been bringing you, and also I can continue to bring this content as well. So thank you very much for watching. I will see you in the next live stream. Hopefully, we will be taking a trade on that next live. And yeah, again, smash that like button, and thank you very much for watching. See you guys later.